Thanks for joining me this Friday, the 26th of July. I'm Grady market analyst at Ballarat, and this is the weekly market update. It is the end of July and we are ramping up for reporting season of FY24, which is set to be one of the most highly anticipated yet, as we analyse how ASX-listed companies fared the high interest rate, sticky inflationary environment that was FY24. So what are we expecting come August as companies start releasing FY24 results? Well, firstly, China's post-pandemic economic struggles have been a major concern for global markets recently. Companies with exposure to China are really starting to feel the pinch in FY24 and FY25, with issues ranging from sluggish retail sales to a decline in economic growth. For retailers, the news isn't so good. China's retail sales growth has dropped sharply from a high of 34% in 2021 to just 2% growth in June 2024. The price of iron ore has also fallen by 1.9% over the past year due to reduced demand from China, affecting Australian mining companies. Heading into FY24 reporting season, all eyes will also be on large cap stocks to see if they can maintain their high valuations amid slowing economic activity and rising global uncertainty. Locally, the tech sector has been booming thanks to advances in AI. However, with valuations soaring, analysts are cautious. Investors will be closely watching earnings growth in the tech sector and profitability indicators during this reporting season for local tech stocks. Looking back, the February 2024 reporting season saw varied results, with 42% of companies beating expectations, and the upcoming August season may see shifts due to higher costs and tough economic conditions in the latter half of FY24. Some companies have introduced price increases which could boost their financials this August reporting season, especially on the margins front. For instance, James Hardie, Boral and Ansell have implemented price hikes. Healthcare stocks are rebounding strongly in 2024, driven by commercialisation efforts post-pandemic. Telix Pharmaceuticals, for example, has revised its revenue guidance upwards in recent days. Consumer discretionary stocks might face some challenges with some slowing retail spend not only in Australia but around the world. Inventory levels will be critical for retailers, impacting their ability to manage costs effectively. The rise of AI could drive demand for tech-related products. JB Hi-Fi will be closely watched to gauge this demand. In commodities, diversification into copper and other metals might offset losses among other commodity assets. Uranium miners are looking pretty strong due to increased global demand for nuclear power. Gold miners are continuing to benefit from a strong rally in the price of gold, driven by global geopolitical tensions and inflation hedging and interest rate cut outlook. Utility stocks are poised to benefit from increased demand for energy and water, driven by data centre expansion for AI applications. Origin Energy and AGL Energy are well positioned in this regard. So in summary, the FY24 reporting season will likely see a very mixed bag across sectors, with China's economic woes, AI advancements and commodity price fluctuations shaping investor sentiment and company performances. So beware and watch out for these factors as we head into August. Locally, from Monday to Thursday, the ASX 200 fell as investors were in sell-off mode after turbulence on Wall Street dampened investor sentiment locally. The ASX 200 fell 1.38% from Monday to Thursday, with all 11 sectors ending the week in the red, led by energy stocks tumbling 6.4%. There were some winning stocks on the market this week though, amongst a sea of red, which were led by Insignia Financial jumping 13.45%, while Iris rose 13.32% and Zipco added 6.8% over the 4 trading days. And on the losing end, it was a tough week for South 32, which declined just shy of 15%, while Paladin Energy tumbled 10.36% and Regis Resources ended the week down 10.16%. On the broader market front, the All Ords fell 1.4% this week as Argosy Minerals tanked 59.2%. Drone Shield fell 23.98% and Syra Resources tumbled 18.46%. Spartan Resources, the gold miner, offset some of the heavy losses on the index with a 22.49% gain. The most traded stocks by Ballarat clients this week from Monday to Thursday were Drone Shield and CBA. Clients also bought into BHP, Rio Tinto, Zipco and Woodside, while taking profits from Woolworths, CSL, Pilbara Minerals and West Farmers. And the most traded ETFs by our clients this week week were led by iShares S&P Small Cap AUD ETF, Global X FANG Plus ETF, and BetaShares US Dollar ETF. On the economic calendar front next week, we may see investors react to Australia's monthly CPI data out on Wednesday, with forecasts of a slight decline in Australia's inflation rate to 3.7% in June from 4% in May. Australia's trade balance data is also out later next week, with the expectation of an increase in trade surplus to $7.3 billion in June from $5.773 billion in May. Overseas, the European region's GDP growth rate data for Q2 is out on Tuesday, with the expectation of an increase in the yearly GDP rate, but a slight decrease quarter on quarter. US jobs data is out on Wednesday, with the expectation of 8.35 million new jobs having opened in June. And the Fed will hand down its latest rate decision on Thursday, with the market expecting the Fed to maintain the current rate of 5.5% for another period. Now, throughout this reporting season in August, we will be producing videos every Wednesday and Friday to update you on the corporate earnings results through thematic videos of the winners and losers and provide outlook for FY25. Be sure to tune in and stay tuned as a Bell Direct client throughout the month of August. And that's all for today. Have a wonderful weekend and happy investing.